Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex.
Chicago soybeans. 13 weeks ago here, and at every opportunity since, I said, and I quote, "The only other thing to bear in mind is not here on this daily chart, but in Chicago soybean meal," and that is the well-highlighted annual key reversal down we saw there for 2023. Not directly related here, but not worth ignoring either, end of quote. Now, I know I sound utterly boring, but this point is important. I feel I must keep repeating it such that in all things this year and going forward, all things should be seen in the shadow of this pattern. Okay, since the low in mid-August, we have seen the creation of three patterns. Firstly, a mid-August to mid-October bull channel. Secondly, a late July to late September reverse head and shoulders pattern with a bright red neckline currently at 1026. I'd previously set out potentials for this pattern of a primary target X overhead in the 1096 area and a secondary harder to reach target X1 up in the 1123 area. The market tried upwards towards the primary target X during late September within the bull channel, but just missed reaching the primary target X mainly due to the bearish pressure of the declining mauve medium moving average currently at 1029, capping and slapping the market lower. I'm still considering retiring these two targets now, but I'll leave them on for another week. Then there is the third pattern, the early July to early October bearish shift pitch hook highlighted in dark blue on my daily chart. This pattern is still operational and for now looks quite good, with the market in between the overhead upper time currently at 1042 and the middle time below currently at 947. There is another pattern I'd like you to consider, one I spoke about 6 weeks ago when I said as a big picture idea to look at the action since the double top in May as a possible descending scallop pattern. For this pattern to realistically work, prices, and I quote from 6 weeks ago, would have to soon halt and then decide whether they wish to remain bullish or bearish before making their move. It's a bit early to say if this pattern will fully deploy right now. End of quote. Even now the pattern is not fully deployed, but with plenty of potential both down and up. An idea on the upside for such a pattern, not yet a target, not even a potential, would be in the 1163 area on the upside and alternatively 890 on the downside. As I said, it's still early on this one, so in the meantime, as I advised last week, and I quote, just watch the dark blue bearish shift pitch hook for the immediate bearish angle of attack, with some diminishing potential targets topside for what may turn out to be a failed targets for a reverse head and shoulders bottom. End of quote. Now, one new item I also like to consider, and that's a small October base double bottom, which reached both its primary and secondary targets topside with the pipe top formed over this past weekend. I also note how the green short medium moving average, currently at 1021, the bright red neckline, the mauve medium moving average, and a dark blue upper time are all quite congested as a resistance area between 1021 to 1042. Chicago soybean meal. The main pattern driver in this market had been, and I suppose still is, the dark blue November 2023 to early May 2024 bearish shift pitch hook that you can clearly see on my daily chart. The market is currently in between the overhead upper time, currently at 309.80, and the middle time below, currently 262.20. This pattern had been previously breached and arguably broken, with prices having consecutive closes over the dark blue upper time. However, please note this break higher was not a spontaneous move, but rather the result of the construction of bullish incentives, notably the mid-August to early October bull channel that petered out, and we saw a subsequent break lower at the start of October. The cap on the market was the combination of the upper bull channel line and a declining long moving average, which is currently 334.10. That just saw a single close over it before swiftly turning lower at the start of October. The break below the bull channel saw both the primary and secondary targets below achieved. I raised the point 5 weeks ago about both the primary and secondary targets that, and I quote, "If this should come about, then it raises the point about the dark blue bearish shift pitchfork could have repaired the break higher seen these past 2 weeks." And I only need to remind you once again of my words of 67 weeks ago, so that is now 72 weeks ago, and ever since, so well over a year and a quarter ago, when I pointed out that Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023, and we have been living in the shadow of this pattern ever since. End of quote. There is one new pattern I highlighted last week that I'd like to draw your attention to, one that has developed since that high seen in early October. And it's the bright red mid-May to early October bearish Andrews pitchfork. The market is right now running along the top of the middle tine, currently at 292.20, and this tine is providing a pretty good snapshot of the bearish angle of attack of this market. I do not think this new bright red pitchfork will yet replace the dark blue pitchfork. Rather, I suspect they will be working together, with the bright red one having a slightly more acute bearish angle. Chicago soybean oil. The main recent actions over the summer here had been the construction of an early July to late August bear channel that almost from the start broke down through a key support that became a resistance and is now once again a support, if only just. And that is the bright red highlighted neckline extension, currently 45.49 of the October 2019 to February 2020 head and shoulders top. The end of the move down of the bear channel finished in mid-August, really in the middle of nowhere. However, it was not a simple end, as the price over August to September took a second crack at heading lower, which failed in mid-September. We ended up not only with a dark blue pushing back up within the mid-August, mid-September bullish Andrews pitchfork, but most recently this week back down out of it again. But we also ended up with an August-September double bottom with a primary target X in the 46.36 area and a secondary harder to reach target X1 up in the 47.56 area. Not only that, but going back to the earlier old bear channel pattern, we still had outstanding potentials for a break up and out of this pattern. Thus, as I said 12 weeks ago, we had a primary target X2 up in the 48.23 area and a secondary harder to reach target X3 up in the 49.50 to 49.60 area. 2 weeks ago, prices reached the primary target X at 46.36, and last week reached the secondary harder to reach target X1 up at 47.56 area. Additionally, primary target X2 up at 48.23 from the earlier old bear channel was also reached last week, and his only target X3 up at the 49.50 to 49.60 area that is still alive. So what has developed over the last few weeks that stimulated such a rise? Now, I suggested last week the construction of a new mid-September to mid-October bullish shift pitchfork, highlighted on my daily chart in purple. This purple bullish shift pitchfork is at a slightly less acute angle than the bullish Andrews pitchfork. The market is right now in between the overhead middle time, currently at 46.30, and the lower time below, currently at 43.78. Overhead, we have the 38.2% Fibonacci line of the March 20 to April 22 move of 48.95. This Fibonacci line capped prices in July, then the start of April, the end of March, mid-February and throughout January, as well as parts of this past week, this year. So just keep a wary eye on that 38.2% Fibonacci line.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.